Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is September 29th, 2025, and we are taking a deep dive into Litecoin, or LTCUSD. There is a massive amount of news surrounding Litecoin right now, so first we'll cover the fundamental catalysts, and then we'll jump straight into the charts to see how it all translates into price action. The biggest story by far is the mounting anticipation for a spot Litecoin ETF approval by the SEC. We've seen major developments, including Canary Capital filing an S-1 last October, and Bloomberg analysts are now assigning a staggering 95% chance of approval for pending applications. This optimism is further fueled by a potential leadership change at the SEC, with the current chair, Gary Gensler, expected to be replaced by the more crypto-friendly Paul Atkins, which could significantly speed up approvals. Beyond the ETF hype, institutional adoption is clearly on the rise. We've seen headlines about MEI Pharma committing $100 million to a Litecoin treasury and even adding Litecoin's creator, Charlie Lee, to its board. This isn't just speculation, it's tangible, institutional capital flowing into the ecosystem, which is a powerful long-term bullish signal. Despite this overwhelmingly positive fundamental backdrop, some market analysis points to a recent crypto sell-off, suggesting that assets like Litecoin might be in an oversold position, presenting a potential opportunity. With bullish predictions suggesting prices could hit $150 in October and even approach $500 by year-end if an ETF is approved, the stakes are incredibly high. Now, let's see what the charts are telling us and if this bullish narrative is reflected in the technicals. Looking at the daily chart for LTCUSD, we can see the entire story of the past year play out. There was a period of accumulation in the $60 to $80 range before the explosive move that began around November of 2024. This rally, which took the price from about $65 all the way to a peak of nearly $147 in early December, aligns perfectly with the initial news of Canary Capital's ETF filing on October 15th. That peak around $147 now stands as a major psychological and technical resistance level that bulls will need to overcome. Following that incredible rally, we saw a sharp and deep correction, with the price plummeting over 45% down to the $80 level in a dramatic move on December 9th. The market then tried to recover, but ultimately failed, leading to another severe drop in mid-December from $125 down to a low of about $86. This established a critical support zone between $85 and $95, which held strong for several months through the spring of 2025. Let's zoom in on the period from the initial pump to the subsequent correction to get a better feel for that volatility. You can clearly see the massive volume that came in during November and December, confirming the intensity of that news-driven rally. Then, notice the equally high volume on the red candles during the sell-offs, showing a fierce battle between buyers and sellers. Returning to the full daily chart, after consolidating for months, we saw another leg up starting in late April, pushing towards the $110 to $120 range. However, the price has struggled to gain significant traction above this area. Most recently, in mid-August, we saw a push to the $130 resistance level, which was sharply rejected. This rejection led to the current downtrend we've been experiencing throughout September, bringing the price from a high of around $118 down to its current level near $106. This recent weakness aligns with the news reports mentioning a broader market sell-off. The key takeaway from this long-term view is that while the fundamental news is bullish, the price has been in a corrective phase since its January peak. We are now sitting at a critical juncture, well above the year's lows, but also significantly off the highs. Now let's switch to the 1-hour chart to analyze the current, more immediate price structure. Here we can see the downtrend from the September 10th high of $118 more clearly. The price has been making a series of lower highs and lower lows, which is the definition of a bearish trend. We found some temporary support around the $112 level, but that broke on September 22nd, leading to a sharp drop. The current short-term support was established around $102.35 on September 25th, and we've seen a slight bounce from there. Right now, the price is consolidating in a tight range between roughly $104 and $107. This consolidation after a sharp drop could be a bearish continuation pattern, like a bear flag, or it could be the market building a base for reversal. Immediate resistance to watch on this time frame is the top of this range, around $107.30, followed by the broken support level at $112, which may now act as resistance. Drilling down even further to the 15-minute chart, we can examine the price action of the last day. We can see the battle happening right around the $106 level. After reaching a high near $107.37 yesterday, the price has pulled back and is now hovering just below that level. Volume has been relatively low during this period, suggesting indecision in the market. Traders are likely waiting for a catalyst to push the price out of this tight consolidation. A break above $107.40 on significant volume could signal a short-term bullish move, while a break below the recent low of $105.50 could indicate that the downtrend is resuming. So, to bring everything together and recap what we're looking at for Litecoin. The fundamental picture is arguably one of the most bullish in crypto, centered around the high probability of a spot ETF approval and clear signs of institutional adoption. However, the technical picture is currently neutral to bearish in the short term, as the price is in a clear downtrend from the recent highs and consolidating near the lows. Let's summarize the key price levels you absolutely need to have on your radar. Major long-term resistance remains at the $130 level and the yearly high of $147. More immediate resistance is the recent high around $118 to $120. The current battleground and potential pivot point is this $104 to $107 zone. Key support sits at the recent low around $102, with the psychological $100 level just below it. If that level fails to hold, our major must-hold support zone is much lower, back down in the $85 to $95 area. Now for some unbiased predictions. The bullish scenario, which I believe has about a 70% probability in the medium term, is that positive news flow around the ETF will act as a catalyst. A break and hold above $120 would reinforce this, putting targets of $130 and $147 back in play. The bearish scenario has a lower probability, perhaps 30%, but is very real. If the broader market continues to sell off, or if we get unexpected negative regulatory news, a break below $100 could trigger a much deeper correction towards that $85 support zone. In the immediate short term, the most likely scenario is continued consolidation within this $102 to $112 range as the market waits for its next signal. The most important thing to watch for is any official announcement from the SEC, as that will undoubtedly be the primary driver for Litecoin's next major move. That's all for today's analysis on Explain the Charts. Thank you for watching, and be sure to like, subscribe, and hit the notification bell so you don't miss our next video. Let me know your thoughts on Litecoin in the comments below.